Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and then how we can plan for a better trade for the next day. So we had the bears that hit our markets today. We have poor global cues from the beginning and that brought on the markets today. So let's analyze and see. We'll do a pre-market analysis for tomorrow, Jan 20th, Thursday, and it's an expiry day, 2022. We'll look at all of these parameters. Primarily, it's candlesticks price pattern and Bollinger Bands for the volatility, support resistances, momentum, and divergence trend. Right. So we would also have additional data on open resistance, use participation, and then public commodities and all of that, and then we'll have actions as well along with that, right? So let's move ahead without wasting time. Look at the candle, man. See the red, the wide range bearish candle is what you see here on the Nifty. And Bank Nifty, it's indecisive, right? Because it's a small body and equal wick size on both. It didn't fall that much. It fall and recovered basically. At one look at it, we can make out that Bank Nifty is much stronger than Nifty. Nifty 2.5% is given off in just 2 days, right? Today alone 1% gone, 175 points. Yesterday more than 1% gone, 195 points gone. So that's true, right? That's a fall, right? And it's a wide range bearish candle, not normal. The candle size. Look at the candle size, right? Clear bearishness, clear sell-off, clear pressure, clear resistance. That's all it indicates. And the main thing today, what happened is 18,000, the psychological rounding number, whatever you call, that is gone, right? It lost 18k during the battle today, right? Bank Nifty also dropped, but it's small, right? Half a percent, less than half a percent, 169 points in small body, as I said. But the key thing is it maintained 38,000, which is a rounding number again, just like 18,000 in Nifty, right? So intraday price action, the Nifty was trending. See what's happening. Nifty trending down. There's a gap support there. There is broken and then slipped through, and then some recovery happened afternoon. But Bank Nifty was flat around the support zone, dipped and then recovered and went back to the support 38k. That support zone, right? That's intraday price actions. Now volatility, if you see, you can see that there is a bend that has happened, right? So the bullishness has taken a pause. It's clearly indicated from action. Now the next thing is it is fallen off the walking on the bands. It is moving on the bands bullish, right? It has fallen off from there, taken a big break from there, and now it looks like it's heading to that median of the Bollinger. So although there is a bend has happened indicating the slowdown or the pause of the bullishness, we see that the distance from the median to the band up is huge. That means it can be highly volatile like it happened yesterday, right? Same here. It is the expansion is still there, but it has fallen, moved away from the walking of the bands, and then down here we have closer or equidistant, much closer median of the Bollinger Band. That's there. So skews of the volatility has not happened. That means volatility, the speed at which market can fall or rise is tremendous, is much big as long as there is no skews in the volatility. You cannot say it's sideways because expansion is still there. You cannot say it's bearish because it's still above the moving average, right? So it's kind of taken a pullback. You can say that's all that the Bollinger Band is indicating, but this bullish thing has taken a halt clearly. Support resistance. Look at the levels. So we lost 18,000 today, and it has slipped and closed 17,938 kind of levels, right? So the first resistance to take out would be 18,000 once again, and then 18,100 once again, then again 18,200, and then take the resistance which is not broken at 18,350, 18,400, and then after that all-time high at 18,600. Downside resist, the support would be 7,800, 850, which it has not touched. That's a good support there, and then out after that, because 7,900 has breached, it's not a support. So 7,800, 850, and then you have 7,500, which seems to be a good support. 7,500, 7,600, because if Fibonacci is 23 retracement level as well. And if that is also gone, then you have 17,357 400 levels, and so that's how the support resistance works on the Nifty. On the right side, Bank Nifty, you see the small body candle, which is a resistance. Is first resistance would be, to keep 38,100 band, and then above that you have 38,350 to 500. 38,500 would be the next resistance, and above that you have 38,900, 39,000 rounding number. Downside support would be 37,700, 37,800. That's a good support. And then if that is also reaching 37,300, 400, which is Fibonacci 23 retracement levels, and below that you have 37,000, which is a good support. Right. So tomorrow is an expiry. These are the levels that you need to keep in mind. These are derived based on either Fibonacci or symbol marking of the previous areas where the consolidation or the resistance or the supports were seen in the price action. Right. Now, coming to the momentum is on the Nifty that you see that it has slipped in the sideways zone, right? RSI. But Bank Nifty is bullish on the short term. This is daily candle, right? Now, it has not slipped much, right? It's 56 point something, so it's not too much. So I'm trying to draw a bullish reverse momentum divergence, which can bring up to the target of 18,350 kind of levels again, if it works out. So well, how do you know whether it works out or not? If it moves above the today's close candle and above, that means it may be working good. That means it has just slipped slightly. So 60 level need not be taken always precisely on the other side. It's right. Compromise of the levels of the RSI, few points below and up can be considered when you are marking the divergence. So there is a bullish divergence that is there in the Nifty. Same here. Here it is clear. There is no slip. Right. The price is moving up and the momentum is coming down. There is a bullish reverse momentum divergence which can be bullish, and it can take it back to 39, 38,500 above. 39 nearby levels, you can take it back if it works out. How do you know that? If the last candle high, if it goes above that, it means it's a bounce and the divergence is working. That's what you have to make out. So basically the momentum is lost into sideways slightly. Not sure because tomorrow's an expiry, then after the expiry will come. So momentum has slipped slightly on Nifty. Bank Nifty is still intact with bullish momentum, and the medium term or the weekly candles momentum is intact bullish on both indices. Trend indicators ADX, the thing that happened today, another thing, momentum slipped. Trend also closed over on the Nifty. So Nifty had three big things in 2 days. 2.5% lost, two wide and bullish candles, momentum lost, trend lost. Crossover has happened here to the bear zones. DMI negative. But Bank Nifty, no crossover has happened, no momentum has slipped. Bank Nifty is strong. On the medium term, both the indices have got bullish trend. So trend has a chance to take. Momentum has lost. That too only in Nifty. Now we could fix it. We had a flat fix, but mother it is close to 18, right? Which is 18 is somewhere here, and this is the range 18 to. It had in between go to the 21 and then come back, and then it was hovering around this 18. So there is a possibility that it can drop down to the once again back main road as it was the nature of the volatility, and so market could rise up. Means it's an assumption may not work, but what we need to make note is it is at the higher going towards the higher end of the volatility range, and there is an interest chance. That's all. There's no mandatory that it should work. Implied volatility is 16, and then maybe also has dropped because of today's price action at 47. Today was a flat day for the VIX. Volatility is flat. It went up and went down. If you look at the 5-minute charts of the India VIX. Open interest analysis is very crucial for Jan 20th Thursday tomorrow weekly expiry. Right. Overall, it looks bearish. On the Nifty, 0.49 put call ratio itself is bearish. You see the graph of Nifty, you can see the largest number of writings in the call side, not in the put side. That itself means that there is a bearish pressure there. Now, where have people written? 17,500 seems to be where the highest put writing is seen. That means that's going to be a very good support. And after that, 7,900 also has good writing on the put side, right? 18,300 has good resistance, and 18,100 also has good resistance. So there is a chance, that it can retain the 18,000 back. You never know. There is also a chance that it further dips and then again takes the Bollinger Band supports and then 7,500 nearby. it could settle. Anything can happen. No. But this is where the right things are happening. So highest, so what you have to keep in mind is, as of today, 17,500. It can move around 18,300. If that's a wide range, that's a 500, 800 point range, big range. So you have to wait for the next tomorrow's. But what happened with futures open tonight? It's a short build-up that happened today. The bank nifty, no, it's less bullish. It's less bearish actually. It's 0.67 is not bullish, but no, not as bad as put call ratio of the Nifty. And futures open interest rate is showing that it is a long unwinding, which means the people who have gone long now are doubtful and turning to unwinding the loss in the short, right? So that's bearish only, but it's not a short build-up that you see in the bank nifty, but a long unwinding. And the maximum put rating is in at 38,000 and then 37 after that. No, maximum resistance in is 40,000, very far away. There is a scope of moving from 38 and right, and a good resistance is seen at 38,500. So whether it slip to 37,000 or 38, probably maybe where it may try to settle. Never know. All this are dynamic on an expiry day, everything changes, gamma effect comes in and all that, right? So that's the open interest data for the January 20th. Match this with the levels and the supports that we had discussed earlier slides, right? And then try to draw mark lines where you have to make the entry intraday or swing or push or whatever it is. Look at the red over there in fee. The IT is gone, slipped right down, and that's what happened. Nobody is there to support. The IT is gone. Bank also has gone today. HDFC Bank, HDFC, ICICI Bank, which are all performing yesterday, didn't work out today. But Reliance did well. SBI Bank and Axis, the two banks that did right. So overall, there is no red more, and obviously some selling has happened from both the institution side. Sectorial performance IT went down 2% again, another 2%. 2% we had already lost now. Anyway, the sideways moment is what you see, so you'll have to wait. Non big stocks from it down for intraday swings until the momentum catches up. Metal is again 1% up. Metal is, and what are the two stocks that have shown some bullishness, right? On nearly 1% of up move in both metal and auto. And auto is clearly bullish even now in the short term and the medium term, both bullish, and stocks can be. Auto is the only sector which is bullish as from the momentum perspective. Metal is momentum is lost, but no, it's a close green today. Pharma flat hammer, right? Dip and bounce. That's what hammer is, right? Both momentum is sideways, so we'll have to wait. FMCG down 1%, we'll have to wait. Reality down, close flat, and short term momentum is sideways, we'll have to wait. So the only sector clearly bullish is auto. Stocks may be big from there. IT, metal, all sideways gone, and metal is slightly up. It's metal and auto. If you only have to consider picking something on the long, right? With the top-down approach, the sectorial approach. Institutional data showed that yesterday there was heavy selling. Big selling by the Fyers and the DAs. Last 2 days consecutively, both institutions, without supporting, and any one of them supporting the market, both have started selling. So that is dangerous. Today also, same thing might have happened. FIs might have solved. Otherwise, this much fall not happen. The data is not available as of now, but yeah, that's not encouraging. And the dollar is, you can see that the dollar index is a rise up, but it has halted and facing some resistance. Stopped today. The shoot up. Similarly, the USD in our currency pair also has slowed down. It's a red candle today, but the direction is towards up. That means rupee is weakening. Crude oil is making history with all-time high prices, which is not good for us, our economy, and obviously our markets also likewise. Gold is trying to break out of this resistance zone since long time, so it has a very sideways momentum since very long time, and it's exactly doing that. Now global cues are bad, as I said before. The Dow Jones fall 543.5% down yesterday, and today it does not open. And US markets, as of now, it seems flat, but you have to check this if the downfall in all the US markets and the European markets is continuing, or is it able to recover or not. Tomorrow morning, you have to check, and then also check if any big moves are reflected. So if it is flat, then you can't predict anything. If it is a big move, obviously that big move will reflect now with a gap up or gap down. So pre-market analysis only, it helps to look at the global market, how it performed. Two actionables. One is Chambal fertilizer, which is a rounding pattern, breakout, confirmed, big wide range candle, big volumes, big momentum, big trend, short term swing position, right? In this analytics, it is a potential breakout. It's actually broken out from the momentum breakout point of view. Trend also is bullish, volume also good, but it is ideally we should wait for a confirmation of a candle above this for a swing trade upwards, right? With tight stop losses. Right? That's what Hindustan Automobile and Jebel Fertilizers, two picks. But I would mildly bearish actually, right? Because of the global cues and chart pattern crossover of the trend and the momentum that happened today. 2.5% 2 days is too bad. Institutions continue to sell again now. They're increasing the pace slowly. So these are bad cues, and so mildly bearish and neutral kind of, because there's an expiry date. You know what happens. In order to maintain the levels and positions, many manipulations and volatility things can happen in the market on an expiry day. So that's why there is a neutral also there. Right? Global cues are bad. US markets has been down since few days, and that is reflecting in our markets also. That's why, right? And the chart is also reflecting the same. The only hope that is there is the bank nifty, which is not fallen up big yesterday also. Today also it is not fallen up. Hardly 0.5% yesterday, 0.5% today. So that shows some strength in the bank nifty. So if at all somebody has to save the index or save the markets, it's going to be the banks. The last two paragraphs is a repetition, but one more point is that VIX is at a higher point of the near to the higher point of the range. If it is above 20, it could be cautious, and if it is, there is a chance of mean reversion. That means it can come down to towards the 50. If it is mean reverting at that point, it can happen at 20, 18, 19, 20, 21, anywhere. Right? You never know, but as long as it's in the higher range, you could expect that a fall off can happen. The position sizing is very careful. Right? Double Qs and negative news flow that is happening. And Fed tapering is also happening, so that would make the work. And along with that expiry also happens, markets will be very volatile. So trade with cautions. Always use vertical spreads, interest spreads, such that the risk strategies can be hedged and demand the risk would be there. You would not have surprises and reversals when there is profit booking or big reversals happens, right? So that's my bearish neutral short-term view that I have. If that helps you to form your view for tomorrow, and if it influences helps you, not influence basically, it helps you to frame your own trade plan for tomorrow in some way, then consider hitting the like button and share to your friends and colleagues. Thanks for watching. Happy trading, happy learning. Bye.